Hello, welcome to the Week Ahead Report with City Index. Today is Friday, September 23rd. I'm Sandy Jadeja, and I'll be with you through this report. If you'd like to keep an update on the current market turmoil, then you can follow my comments on Twitter, which is at Sandy_City Index, where I post my thoughts on the markets as they occur throughout the day. Of course, we'll focus on the key markets, which are the FTSE 100, Dow Jones, and gold. These three markets are quite popular with our traders here at City Index, and this is certainly something worth focusing on as the markets really have picked up some volatility. We'll kick off with the FTSE 100. Now, as you know, I've been watching the 54.45 level as resistance for several weeks, and I pointed out that on the downside we should really keep an eye on 5015 as support. But also, the other aspect that I really want to focus on is the pattern. Now, we had the A, B, C, D, and we were expecting E to complete at 5600. Now, typically when the markets do correct, you do get one of two patterns, which is either going to be the ABC correction or a complex ABCDE. The fact that we've broken below point D suggests that this is actually an ABC type of correction, and we should now start focusing on the 4781 area. There is, of course, the opportunity that that could also fail, so we do still need to keep a firm eye on the 54.45 area. But given the fact that we have broken below point D, that would suggest that the odds are probably increasing towards another low towards 47.81. I think the key thing to focus on for next week, heading into the early part of next week, is are we going to sustain 5015 on the close of Friday? If we close below the 5015 area, then that would give us a firm decision that we probably are going to see much more volatility come into the markets next week. So these are the key levels: 5015 with a lead towards 4780. On the upside, 54.45. If we do break that, then the opportunity still exists for 5600. We obviously are in a key trading range between these two levels here, and so it can get quite messy and of course quite awkward to trade these markets as they occur. But if you keep an eye on these levels, then of course that gives you some insight as to potentially where the breakouts could occur. Dow Jones, really interesting. As you know, that I've been watching the 11,365, and of course support at 10,800, and we had 10,007, just a little bit below the 10,800. But now that we cleared the 10,800 and we also took out the key low, this is looking very, very bearish. So in the near term, if we sustain a close below 10,800, that could potentially open the doors initially to go towards 10,312, but it looks quite nasty below 10,312. In fact, we're looking at the 9,600 area, which is a very long way away. But there's nothing to suggest that we could see sharp falls coming into the month of October, because typically September and October tend to be bearish months, and that's exactly what we're seeing right now. So the key support and resistance levels to watch out for is the 10,800 support. Close below that, we could open the door towards 10,312, and the upside resistance level still stands at 11,365. Gold is really turned interesting, and here too 1890 has been the level that we've focused on for resistance, and we had a double top pattern there taking place. In the previous reports I pointed out that the moving average also had turned to the downside, and the fact that we had closed below moving average was also suggesting at least short-term to near-term weakness. Now we had support coming in initially at 1750, followed by 1700. Notice this red bar that has now taken place. This is a unique trading model, and what that suggests is if we start breaking below 1721, and today is Friday, so the second bar is Friday's bar. If we take out the 1721, that would indicate short-term bearish moves, and we'd be looking towards 1700 as the support, and below that the 1645 as the target. As long as the bars remain red, which we'll keep you updated on throughout the next couple of weeks, as long as the bars remain red, then that would suggest that the short-term to intermediate-term trend is now turning bearish. But longer term, we are still bullish, so that puts us in a fairly awkward situation. So at the moment, short term, we're bearish. Intermediate to longer term, I would suggest that we're probably neutral until we start turning blue again on the bars. So support levels coming in at 1700, and below that we have 1645. Upside resistance still remains at 1890. If you'd like to learn more about technical analysis and how to trade these markets, which are giving some great opportunities in the current volatility, then log on to cityindex.co.uk and you can learn a lot more about our live seminars as well as our webinars. As always, these reports are simply for information and educational purposes only. They are not for advice. Please make sure you understand our risk warning and disclaimer. I wish you safe trading and look forward to seeing you in the next report.